Alright, now we want to look at a disposal of an asset. Notice we have a piece of equipment we originally paid $50,000 for. So originally that was our asset. However, we've taken $20,000 of depreciation in previous years, which means we've expensed that part of the original cost, which means we've got $30,000 of the original $50,000 that hasn't been expensed yet. That's what we call the book value of that asset. So if I get rid of that asset, I get rid of these two accounts, which essentially reduces equipment by $30,000. So in the first case, notice it says, what if this thing was scrapped? Well, if this was scrapped, we would get no cash for it. So assets would go down by $30,000, liabilities wouldn't change, so equity would decrease by $30,000. Okay, I gotta make that a little bigger for everybody. Oops, wrong one. Okay, bear with me. So that decrease in equity is what we would call a loss. So if we were going to make a journal entry, we would get rid of our accumulated depreciation, which is $20,000. That would be a debit, because it normally, this debit would zero out that account. I've got $50,000 in my equipment account, so I'd make a credit. Notice these two net out to a credit of 30, which is this decrease in assets. And then in this case, I'm going to have a loss of $30,000, which is my decrease in my equity. Now I'm going to do what these two things right here, no matter how much money or if I get any money for this equipment. Now take a look at the next scenario. Next one, we sell it and we get $37,000 for it. In this case, assets actually go up, because one asset goes down by 30, another one goes up by 37. So we're going to have an increase in equity of $7,000, and we're going to call that a gain. So let's get rid of our loss here. We're going to make a credit to a gain account. The reason I'm making a credit goes back to our rules of debits and credits. We have an increase in equity, and increases in equity are recorded with credits. And then I'm going to make a debit here to cash for $37,000, what I actually received. And lo and behold, we have equality of debits and credits. The next case, we got $18,000 for our equipment. Notice one asset goes up $18,000, another asset goes down by 30. So assets have gone down by $12,000 without any change in liabilities. So equity has to go down by $12,000 as well. Okay, if I go to journalize that, I've got a debit to cash for $18,000 because that went up, and I still have to do my accumulated and my delivery equipment the same way. Thing is, this time, however, I can't make a credit because credits are increases in equity, and equity actually went down. So I record decreases in equity with debits, and I'm going to call that a loss. Now, gains and losses go on our income statement. So losses will reduce net income, gains will increase net income.